Welcome back to the Elegante FX Master Course Module 7. In this, we're going to be going over, how are you trading Forex? How are you doing this? What are you doing when you do it? And how you're going to be making money when you trade Forex, okay? So, let's move right into the first slide here. So, basically, how you're making money in Forex is you're buying and selling currencies, alright? By placing a trade in the, by placing a trade in the FX markets, it's simple, okay? The goal is to exchange currency, hoping for the value of the currency you buy to increase over the one that you sell, okay? When you are trading a currency, you are always buying and selling a pair, okay? So, let's put this into perspective here. Oh, I have a pen. I did not know I had a pen that I could use to draw, and I'm going to do that right now. All right. Boom. Okay. So you have the Euro US. Nope. Oh, there it is. Okay. You have the Euro USD. All right. EU. That's very bad. I'm not very good at drawing with mouse. This with the mouse. So you have the Euro USD. Okay. EU for short. When you buy, you're expecting the euro to go up in comparison to the US dollar. So you want this pair to go you want this currency to go down, you want this currency to go up when you buy, and vice versa when you sell, okay? That's all you want to do. That's it. So, how do I that's the first time I've ever used that, so let me make sure that I got all that. Okay. Race all length. There we go. Okay, so that's what you're doing. Whenever you place a trade like that, that is exactly what you're doing. You're buying and selling simultaneously, and that's how you're going to make money trading the Forex or trading Forex markets. Okay, so here's an example, and this is not found on the internet. Okay, this is from me. I didn't find this on the internet, so cross that out. That's dumb for me. I don't know why that's on there. I don't know why that was put on there. Okay, this is an example that I created. So here's your formula. The Euro USD rate is 110. That means that the euro is worth 1.10 US dollars. Okay? So you buy 10,000 euros at 110, which is equivalent to 11,000 US dollars in your account. Okay? You sell 10,000 euros at 1.12. That's when you get out of the market. That's, for 20 pips. Okay? You make at $11,200, okay? So you entered the trade here, exited here, and now, you made 200 pips, which equated to $200 in end profit. That's your formula. You bought the euro, you sold the US dollar. The euro increased in value. You can see it increased in value here. It went from 1.1 to 1.2. And by that happening, you made $200 in the Forex markets. Congratulations. So let's get let's erase again. Alright? So an exchange rate. Exchange rates are simply the ratio of one currency valued against another currency. And there's a key point to that, okay? You will always be it'll always be one currency valued against another currency whenever it comes to an exchange rate. And that's always how you're going to trade the Forex markets, okay? So you have the USD CAD exchange rate, which indicates how many US dollars you can purchase. Let me repeat that. So you have the USD CAD exchange rate. This indicates how many US dollars can purchase one Canadian dollar, okay? So, understanding a Forex quote. Let's talk about the USD Jappy, okay? USD Jappy, US dollar, right here. You have the Japanese yen, right here, the Jappy. So your exchange rate is 89.29 in comparison to 89.32. Alright, your base currency always will be the value of 1, will always be your first value. Your quote currency, okay? So, this is a quote, alright? Just remember that. So here's your base, here's your quote. Then here, what we got here, let me switch here and go to a pen. You have 89.29, which is your bid price, and you have an ask price, which is 89.32. Look at the difference in these two numbers, the last two digits, okay? It's 32 minus 29. That is your difference, okay? Come out to 3. That is your spread. Remember back in one of the earlier modules, we had a spread, which was the difference between the bid and the ask price, okay? That is how your broker will make money, and that is your Forex quote. The quote of the USD Jappy is 89.29 to 89.32. This is your bid, this is your ask, here's your difference, okay? Boom. Alright, there's your difference. Your difference is 3, your spread is 3 on that pair. always will be, and excuse me, and one always will be. That's always how a Forex quote will work. Okay. So here we go. FX quotes. Okay, all currencies are quoted in pairs. And when it comes to trading Forex, so you have Euro USD, USD CAD, and AUD USD here. Alright, now you got a laser. Now you can see when I'm pointing stuff. That's really cool. So you are simultaneously buying and selling a currency, which we already said. Alright? If you buy the Euro USD, or if you buy the Euro USD, you're buying the Euro and simultaneously selling the dollar when you do that. Long and short, when you trade, this is how you're making money. Another way you're making money, okay? So whenever you go into the market and you're looking, you're going to determine if you're looking to buy or sell. Buy, which in Forex lingo is long, sell, and trading lingo is short, okay? Buying. If you're buying the base currency and selling the quote currency. If you're selling, it's vice versa. Selling the base and buying the quote, okay? So, we got the bid and the ask. All FX quotes are created by a bid and ask price. The bid price is usually going to be lower than the ask price. The bid is this is the price that your broker is willing to buy, and the ask is vice versa, the price that your broker is willing to sell. This creates what's called a spread right here. That's very important for you to remember, and that's what's gonna that's what it'll set you back on your entries. Let me show you an example here. Now that I know I have a pen here. Okay. So, say here we've got a chart. All right. Pen. Alright, there we go. Oh, not what I wanted to do. Pen. What did I do here? Okay, so, I'm sorry, I'm not going to show you an example because now the pen is gone and it's not letting me, Oh, okay, we're back. We got the pen. Okay, sorry about that. I know this is a little back and forth because of I've found this cool example. So here's your chart. You're looking at a Forex chart, your axes, and you place a buy order right here. All right, let's get another color so we can highlight it. Okay, you place a buy order right here. Right here. Okay, we're gonna draw a dotted line. Okay, so you have a buy order, so when the price comes back down to this price, you expect price to go right back up, okay, and you expect to make a profit. Your spread, if your spread is 3, like we just saw in the other example, that's actually going to place your real entry down here, about 3. Excuse me, when you open the trade, it's not going to put your entry there, but that's where you're going to be down 3 pips, okay? That when your spread is 3. When you enter your trade, you're going to be automatically down 3 pips. Okay, that's what happens, and it fluctuates all the time, so it's not always going to be 3. But in that example, if you buy on this line and your spread is 3 right then and there, you're going to be down 3 pips. That's why a lot of people will tell you to put the spread and take that into factor. I usually hold my trades for a long amount of time that it doesn't really matter, so I don't really take the spread into consideration. But if you're day trading, it's going to be very important because that can be a big difference. So right in between this space here, you'll have 3 pips. I'm sorry I'm stuttering a lot and messing up a lot. I'm just trying to fix it. But so you have 3 pips here, so when you enter, it'll be actually 3 pips lower than where price actually was, okay? That's actually what happens, okay? So, with that being said, this was a little bit of a longer presentation. Thanks for sticking with me while I figured out that pin, and I will see you guys over in Module 8. Thanks, guys.